Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news of a warning about bank risk weightings. But first, global stocks rebounded from their biggest drop in a month. Bonds retreated and the ruble rallied as Russia stepped back from escalating the crisis in the Ukraine. The Russian pullback means they will keep the Crimean Peninsula, but spare further incursions, for now. Europe's dependent on Russian gas as a moderating influence on the West's rhetoric. It probably means Putin has won this skirmish. Both oil and gold dropped sharply as the tensions appeared to recede. Oil lost $2 a barrel overnight and gold lost $15 an ounce. The Chinese central bank has started draining cash again from their financial system, pushing up short-term interest rates. Its recent move to engineer a weaker yuan has led to an unexpected and undesirable result, a sharp increase in cash flowing into its financial system. China has also announced new record levels of exploitable gas and oil in 2013. In Europe, there was something of a surprise well away from the geopolitical tensions. Spain saw its unemployment fall by a few thousand people, and a far different result from the expected rise of 75,000. That's its first fall in 7 years. The Obama administration's 2015 budget is being presented to Congress today, assumes the fastest US growth since 2005 of 3.4% after 3.1% this year. It also sees inflation at 1.6% this year and 2% next year. And it is looking to reduce their federal budget deficit from 3.7% of GDP to 3.1% next year. Bond yields rose overnight, bouncing back off their recent lows on the Ukraine news. Benchmark US Treasury 10-year rates have moved up to 2.66%. Yesterday, our swap rates continued their flattening shift, with short rates rising in anticipation of an OCR rise next week and long rates falling. And there was a warning overnight from a Basel banking regulator. He said banks must accept there is a problem with how they apply their risk weightings. He suggested they were in denial and signalled moves to tighten up on uncomfortably wide variability on how banks apply these risk weightings. I suspect New Zealand banks don't think there is a problem with the very loose RBNZ guidelines either. Although there were a few changes for the Kiwi dollar overnight, the minor trend that was there was higher. We start today at 83.8 US cents, 93.8 Aussie cents, and the TWI is back up a tick to 78.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.